Okay, so you've handed us quite the collection of stuff this time around. It's a lot about this global market crash that we just witnessed. And I think a lot of people listening right now are probably
definitely
a bit freaked out. I mean, you see these headlines everywhere, you know, and you're thinking like, okay, does this affect me personally? Like, what does this mean for my, you know, my job, my life?
Absolutely, yeah.
My savings, my investments. So I think what we're going to do is try to kind of cut through all the noise, all the chatter, and really just dive deep into, okay, what actually happened on April 7th, 2025?
Yeah.
What caused this kind of financial earthquake, and you know, how is it affecting folks, not just globally, but, you know, like I said, on an individual level?
Yeah, I think that's a great way to frame it. I mean, you've given us a lot of material to work with.
Yeah.
But it's all really relevant, and I think we can make sense of it without getting too bogged down in, you know, all the economic jargon and
right, exactly. Like we're not gonna throw out a bunch of you know, terms that nobody understands, but we are gonna go deep. And I think the best place to start is really just looking at the scale of what happened, right? Yeah. So April 7th rolls around, and I mean, the numbers are pretty startling, right? I mean, the S&P 500 drops 3.3%, which in and of itself is a pretty big move.
Absolutely.
The Dow Jones Industrial Average plunges almost 1,100 points. And then the NASDAQ, the tech-heavy NASDAQ, it takes a 4% hit.
Right.
So that's a lot of red ink right there. But what I think is so striking is just how global this was.
Absolutely. I think what we see here is really the interconnectedness of the global financial system coming into play.
Yeah.
It wasn't just, you know, an American issue. The shock waves traveled.
Oh, yeah.
You look over in Europe, for example, Germany's DAX index was down over 6%.
Wow.
And then maybe most dramatically, you see Hong Kong's Hang Index. It plummets 13.2%.
Wow.
Which that's the biggest drop it's seen since the Asian financial crisis back in 1997.
Yeah, that puts it in a bit of perspective.
Yeah. That's a huge historical, you know, reference point.
Yeah, 13.2%. I mean, that's enormous. It really gives you a sense of the panic that was probably gripping markets across the world.
Yeah.
I mean, we're talking trillions of dollars in value just vanishing globally.
Yeah, it's hard to even comprehend.
It really is mind-boggling.
Yeah.
So let's get to the root of it here. Like, what sparked this whole thing? I mean, looking through all this material, what really emerges as that initial catalyst that set off this chain reaction on April 7th?
Well, it seems pretty clear from everything you've provided that the main trigger, the real Kickstarter here was this announcement from President Trump about these new tariffs.
New tariffs.
And these weren't small tariffs either. These were big ones. We're talking like 10% to 50% on goods coming into the U.S. from almost 90 different countries.
90 countries.
Yeah, that's a huge chunk of the global market.
So the markets obviously reacted pretty negatively, right?
Oh, absolutely. There was a massive sell-off.
Yeah.
I mean, people were dumping stocks left and right.
And what was the driving force behind that panic?
Fear.
Yeah.
I mean, pure and simple, people were terrified that this was the beginning of a full-blown global trade war.
Right.
I mean, imagine everyone's expecting these countries that Trump just slapped tariffs on to hit back with their own tariffs.
Right. Tit for tat.
Exactly. And then the U.S. retaliates even further.
Yeah.
And suddenly you've got this escalating cycle of tariffs.
It just spirals out of control.
Yeah. And the concern is that kind of scenario would just absolutely wreck international trade.
Right.
You know, like supply chains get totally messed up. Global economic growth would just grind to a halt.
Yeah. And I mean, it's not just about the physical movement of goods getting choked off, right?
Right.
I mean, these sources also point to some pretty deep-seated anxieties about the broader economic fallout from these tariffs.
Yeah. I mean, think about it. The big worry is that this could trigger a global recession.
Yeah.
Like worldwide economic growth just slams on the brakes. Right. And then you've got the issue of inflation.
Right.
These tariffs, they basically act like a tax on imports.
Yeah.
Those bigger costs often get passed down to consumers, which means the price of everyday stuff just goes up.
Yeah, it's like a double whammy, right?
Absolutely. You get hit with slower economic growth and higher prices.
So not a good combination.
No, not at all. And, you know, we even have this quote from Jamie Dimon.
Oh, yeah.
The CEO of JP Morgan Chase.
Big name in finance.
Yeah, he's a major player. And he was warning that these tariffs, they could really erode economic confidence and make businesses think twice about investing. Yeah,
so it's this sort of cascade of negative effects, right? Like trade gets choked off, growth slows down, prices go up,
right,
and then businesses get spooked and stop investing in the future.
Exactly. It's a pretty bleak picture if it all plays out that way.
Yeah, no kidding. Now, for you listening out there, you might be thinking, okay, that's all well and good.
Yeah.
But how does this market meltdown actually affect me? Like, I'm not some Wall Street hotshot, right. I'm just a regular person trying to live my life. Yeah. How does this stuff trickle down?
Yeah. Well, this is where it gets real for everyone.
Yeah.
It's not just about people who are actively buying and selling stocks.
Okay.
So if you've got any investments at all, 401k, IRA, any kind of portfolio,
right,
you probably took a hit.
Yeah.
And remember that 4% drop in the NASDAQ that we talked about?
Yeah.
Well, that would have especially slammed people who are heavily invested in tech companies.
Right, because a lot of those retirement funds and stuff, they have a big chunk of tech in them.
Exactly.
So even if you're not, like you said, constantly watching the ticker tape,
yeah,
this market crash still probably dinged you a little bit.
Most likely, yeah.
But even beyond those direct investment impacts,
right,
the sources suggest that this whole thing could have much broader repercussions, right?
Absolutely.
Like for the average person who maybe isn't even in the market,
right,
how could this affect them?
Well, think about it. If businesses start facing all these extra costs because of the tariffs,
yeah,
or they see demand for their products dropping because the economy is slowing down,
right,
they might have to start laying people off.
Oh, that's no good.
No, it's not. And then wages might not grow as fast as they would have.
Yeah.
And remember, we talked about inflation, so the cost of living could also start climbing even faster.
Right. So it's this kind of domino effect where one thing leads to another.
Exactly. It can really snowball.
Now, you highlighted a specific example from Australia in these materials, something about their stock market taking a big hit.
Oh, yeah. So the Australian Securities Exchange, the ASX,
right,
lost a staggering $160 billion in value.
Billion with a B.
Yeah, it was a huge drop. And at the same time, the Australian dollar plunged below 60 cents.
Wow.
So that's really concerning for Australians.
Yeah.
Especially because a lot of them have their retirement savings tied up in these things called superannuation funds.
Okay.
So suddenly this market crash becomes very real for them.
Yeah, it hits close to home.
Right. It's not just some abstract thing happening on Wall Street anymore.
Right. Yeah. It's about their future, their retirement, their financial security.
Exactly.
Now, to put all of this into some historical context,
yeah,
these sources, they pull up a few interesting comparisons, right?
They do. They reference the 1987 crash.
Oh, right. The infamous Black Monday.
Exactly, where the Dow Jones plummeted 22% in a single day.
22% in one day? That's insane.
It was a bloodbath. And, it's a good reminder that while these massive market drops are thankfully rare,
yeah,
they're not unprecedented.
Right. History does repeat itself sometimes.
Yeah. So let's see. We had a 3.3% drop in the S&P this time around.
Right.
Compared to a 22% drop back then. So not quite the same magnitude.
Yeah, but still pretty scary.
Oh, absolutely.
So what are the main takeaways from that comparison? What can we learn from Black Monday?
Well, I think the key here is that even though the specific triggers might be different.
Right, like what caused Black Monday was different than what caused this recent crash.
Exactly. But what we see are these recurring patterns in how markets and investors behave.
Yeah.
During times of crisis, you get these rapid, panicked movements.
Yeah.
Fear and uncertainty just take over, and everyone starts selling.
Herd mentality.
Yeah, exactly. And then you see the influence of policy decisions.
Okay.
So by studying these historical parallels, we can get a better grasp on the psychology of what's happening now.
Right. So it's less about predicting the future and more about understanding those fundamental market dynamics.
Exactly, those patterns of behavior.
Right. So speaking of understanding what's happening, the sources also highlight some expert opinions and analysis about this crash.
Right, like who's weighing in on this and what are they saying?
Yeah, exactly. What are the smart people thinking?
Well, one name that pops up is Jim Cramer.
Oh, yeah, from Mad Money.
Yeah, he's a pretty well-known commentator, and he was drawing a comparison to that 1987 crash.
Okay.
And he seemed pretty worried about the potential for a prolonged downturn.
So he's not sugarcoating it?
No, he's definitely on the cautious side.
Yeah. Okay. And we also have some more formal economic research in here, right?
Yeah. JP Morgan Research. They put out a new forecast.
And what are they saying?
Well, it's not great. They're now saying there's a 35% chance that both the U.S. and the global economy could fall into recession before the end of 2024.
35%. That's a pretty significant jump from their previous forecast.
It is. They were at 25% just a few months ago. So these tariffs and the market turmoil, they've definitely made things look a lot more grim.
So it seems like some serious folks are taking this crash pretty seriously.
Yeah, it's not just a blip on the radar. They're seeing it as a potential warning sign of bigger problems to come.
So in light of all this doom and gloom,
right,
what are governments and policymakers doing about it?
Well, we're seeing a few different approaches.
Okay.
On one hand, you've got President Trump, who's out there defending these tariffs.
Okay.
He's saying they're necessary to fix trade imbalances and protect American jobs.
So he's sticking to his guns.
Yeah, he's not backing down.
And what about other countries? How are they reacting?
Well, not everyone's on board.
Okay.
You've got folks like Australia's Prime Minister Anthony Albanese, who's expressing some serious concerns about the negative impacts these tariffs could have.
Right.
Not just for Australia, but for the entire global economy.
So there's some pushback against this whole thing.
Definitely. There's a lot of anxiety out there.
And what about central banks, like the Federal Reserve here in the U.S.?
Yeah.
What are they doing?
Well, there's growing speculation that the Fed might step in and try to soften the blow of this whole mess.
And how would they do that?
Their main tool is cutting interest rates.
Okay.
Which basically makes it cheaper for businesses to borrow money.
Right.
And hopefully encourages them to invest and hire more people.
So kind of stimulating the economy.
Exactly. And there's even talk of multiple rate cuts in the near future.
Wow.
And President Trump himself has been pretty vocal about wanting the Fed to lower rates.
So it's interesting, right? We've got this policy decision on trade that triggers a market crash. And now there's talk of another policy response to try and fix the problem.
Yeah. It's a pretty complex web of interconnected actions and reactions.
No kidding. Now, for our listeners out there who might be feeling a bit overwhelmed by all this, it's important to remember that we're not financial advisors.
Right.
But these sources do offer some practical tips on how to navigate these uncertain times.
Absolutely.
So for those of you who are investors, what are some of the key things to keep in mind?
Well, diversification is always a good idea.
Great. Don't put all your eggs in one basket.
Exactly. Spread your investments across different asset classes, different sectors.
Okay.
That way, if one area gets hit hard, you're not totally wiped out.
Makes sense.
And staying informed is crucial. Keep up with what's happening with policy and market trends.
Right.
So you can make informed decisions.
Yeah, knowledge is power, as they say.
Absolutely. And of course, getting personalized advice from a qualified financial advisor.
Right. Someone who knows their stuff.
Yeah, they can help you develop a strategy that's tailored to your specific needs and risk tolerance.
So that's for the investors out there.
Yeah.
But what about folks who aren't really in the market? Like they don't have a big portfolio or anything.
Yeah.
Does this economic uncertainty still matter to them?
It does, because as we've discussed, this whole thing could have ripple effects that touch everyone.
Right.
So the sources really emphasize those basic personal finance principles.
Okay.
Like creating a budget and sticking to it.
Yeah. The boring but important stuff.
Exactly. And being mindful of your spending, prioritizing those essential expenses.
Right. Needs versus wants.
Yeah, exactly. And building up that emergency fund.
The rainy day fund.
Yeah. It's always a good idea, but it becomes even more crucial during times like these.
Right. Because you never know what might happen.
Exactly.
So solid advice for everyone, no matter their financial situation.
Absolutely.
Now, looking ahead, what's the big picture here? How should we be thinking about the future in light of this market crash and all this trade tension?
Well, the sources, they kind of present this as a make or break moment.
Okay.
Like the global economy is at a crossroads.
Right.
And the key factor that's going to determine which way things go is how these trade disputes get resolved.
So it all comes down to politics and diplomacy?
In many ways, yeah. I mean, will we see these tensions ease up?
Yeah.
Will countries negotiate new trade deals that are more stable?
Right.
Or will we see these tariffs stick around or even escalate further?
Right, because that would just prolong the uncertainty.
Absolutely. And that's what's really holding back the global economy.
So it all hinges on whether nations can cooperate and find some common ground.
Exactly. Businesses need that stability and clarity.
Yeah, so they can invest and grow the economy.
Exactly.
Now, despite all the challenges, the sources do end on a somewhat hopeful note.
They do.
They point to history and how markets have always bounced back eventually.
Right.
Can you elaborate on that a bit?
Yeah. So while the current situation is definitely serious, and there are legitimate concerns, if we look back at history, we see that markets have weathered some pretty brutal storms in the past, and they've always managed to recover.
So it's not all doom and gloom.
No, it's a reminder that even though things might be rough in the short term, there's still potential for growth and recovery down the road.
But only if we take the right steps.
Exactly. We need informed actions.
Right.
Economies need to adapt.
Yeah.
And most importantly, we need to address those underlying issues that are causing all this instability.
Right. So it's not just going to magically fix itself.
No, it's going to take some work.
Oh, well, this has been a really enlightening dive into this whole market crash saga.
Yeah, we covered a lot of ground.
We did. We looked at what triggered it.
Yeah.
The global impact, the historical context,
right.
what the experts are saying, how governments and policymakers are responding.
Absolutely.
And even some practical tips for individuals.
Yeah, we tried to leave no stone unturned.
So for our listeners, hopefully you're walking away from this with a much clearer understanding of this whole complex situation.
And a little less panicked, hopefully.
Yeah. I mean, knowledge is power, right?
Absolutely.
So now that we've kind of laid it all out, I want to leave you with one final thought.
Okay.
We talked about these historical parallels and how markets have always recovered in the past.
Yeah.
But even if the market does rebound, what are some of the potential long-term societal shifts that could come out of this whole experience?
Interesting question.
Right, because it's not just about money.
No.
It's about how these big economic events can reshape our world.
Absolutely.
So that's something to ponder as we move forward.
Definitely something to think about.
Thanks for joining us on this deep dive.
Thanks for having me.